What's up everybody, Tom here with another video. Well, that wraps up 2020 and now we start 2021 guys. And I tell you what, I'm excited and pretty pumped for this year's trading and investing opportunities. We've even seen some big moves over the start of 2021 with notables such as Bitcoin moving very quickly. In today's video, we're doing our weekly top-down technical analysis approach together on the S&P 500, Nasdaq, gold, Bitcoin, Ethereum, and more to try to work out what's going to be happening with the markets this week. Things are starting to look very much like 2017 for cryptocurrencies. Let's take a look at that now and more. Stay tuned. All right, guys, well, as we wrapped up a year, I thought it might be a good time for us to have a look over some of the heat maps and just the stocks that performed well in 2020 to get started. Of course, we all know that the technology stocks did very, very well, but I just want to remind people that on this one-year chart, you've still got things like Intel, Cisco, JP Morgan, and of course, energy stocks still really feeling some of the pain of course, the crisis of 2020. There are some big notables, tech stocks, Disney, Netflix, Amazon, Tesla, of course, that did very well. If you actually break down some of these to percentages, you'll notice that now that we can call Tesla an S&P 500 stock, look at its performance over 2020, 743%. Etsy, 302%. Nvidia, another standout, 122%. And even if we scroll down and we go to super big large caps such as Apple, 81% return. So there were certainly some opportunities in 2020, and I hope many of you out there did get some of these in your investment portfolios. And of course, never be concerned because there's always another opportunity just around the corner. Remember that there's always another kind of investment that will get you a great return. Maybe not 743%, but certainly some really great returns. So let's get started with our technical analysis together. And we'd start here, I think, with the dollar index. Everybody knows, and if you're new to our channel, we've been talking about the dollar index weakness really for quite a while now. Ever since it got under 92, the writing was on the wall that the US dollar would really continue its decline and slip, and it would slip down possibly even as low as like 89 kind of area. We moved into last week an 89.50, and I just want to remind everybody it is non-farm payrolls this week in the US, which does tend to move dollar index quite a lot. So just be warned that on Friday, when we look at the calendar later, that's going to be one of the key bits of information that we need to look at. So if we scroll through here, probably still the daily is really my main key market that I'm looking at here for the dollar index in terms of technical analysis. We still have that 20 exponential moving average acting as dynamic resistance with the 1, the 2, and the 3. And then if it moves back up to this point, there should be some selling pressure that comes into the US dollar. So if that happens this week, might be worth setting alerts and thinking about that zone. Notice as well, we have previous support lows and support lows here, which is right around where that 20 exponential is. So if we had a very big boost, maybe Monday, Tuesday into this level, there'd also be some role reversal there that we could take advantage of and add together with our technical analysis. So what does a weak US dollar mean? Well, it means that things like Bitcoin have gone absolutely crazy, and specifically hedges against maybe inflation and against uncertainty in the world. So Bitcoin smoked 30,000. It didn't really even think about stopping at 30,000. It broke through very heavily. And we can see here on the weekly, we're starting to move very, very far away from that 20 exponential moving average. And we're basically getting to some serious highs here. Now, the thing with Bitcoin is it likes to stop at round numbers. Traditionally, when it's stopped and it's kind of had those pullbacks or crashes, it's done so when it's gotten to a very key point. So 30,000 doesn't seem to have been that point. It got straight through 30,000. And I just want to highlight a candle here that I see quite a lot and that people don't pay enough attention to. So here is a bit of a rejection candle. We talked about this actually on the channel, and we talked about the ramifications of what would happen if the market was to break through this particular candle. So think about what this means. This is a shooting star or pin bar candle. If the market rejects this level, off of 28,000, makes sense for it to do so, then it basically is saying, well, there's selling pressure coming back into the market. The thing is though, when you get a body close above that particular wick, what you're doing is you're taking out a lot of stop losses, you're taking out a lot of hedged positions, all sorts of things, and you're really showing that the market has a huge amount of bullish momentum in it. And this particular candle, when it is broken and closed against like it was here, usually means the market is ready for another big momentum push up. And that's certainly what did happen. We've got another example of that a little bit later on in the video that we can show you as well. But this was an interesting point. So where to next for Bitcoin? A few people have been asking me. Well, I'm going to go have a look at Ethereum first and then come back to Bitcoin. But remember, Bitcoin likes round numbers. Every $1,000 now is going to be probably a little point of resistance. 35,000, and if it gets to 40,000, of course 40,000 just before would surely be a level that the market would be very, very resistance on. But let's have a look at timings more importantly. So here we've got Ethereum, and Ethereum's well on its way to get to $800, which should be that point where you start to see resistance. Remember, we had resistance at 800 the first time, we had resistance when it pulled back after the crash, and of course we're about to reach it again. So that's an important point. But I've got here the monthly and I want to change it to a weekly, and I want to basically look over here on the left hand side. Now, if we notice, Ethereum moved up heavily through the December period, and then that happened with almost all cryptocurrencies. And if we look here at this particular candle, the week of the 8th of Jan was the end for the crypto bull run. Then we started to see sell-off pressure. Now, all of the kind of things that have happened in Ethereum and in Bitcoin, specifically Bitcoin, are very similar to this 2017 run up. We had big spikes coming off things like Thanksgiving events, big spikes coming off Christmas events, big spikes coming off basically whenever people were talking with family members and we were having social interactions with our families as much as we could, of course, in 2020. And this was the same thing and the same phenomenon that pushed Bitcoin and pushed cryptocurrencies through 2017 into 2018. So now that we're done with New Year's Eve and we're coming into Chinese Lunar New Year, usually that is a time of weakness in Bitcoin, weakness in cryptocurrencies. There's a huge amount of money that gets pulled out of cryptocurrencies at that period. And I think that's going to be really one of the big catalysts that's going to cause potentially some pullbacks. So for Ethereum right now, things look pretty good. It looks like it's going to go hopefully towards this $800 kind of price target. But for Bitcoin, and for people wondering what's going to happen next on Bitcoin, it could continue to go up, but it's got those things like the timings starting to go against it, Lunar New Year, and on top of that, we're very far away from quite a lot of key things like the moving average on the monthly and the weekly. And I think that if you look at this on a monthly and you really consider these candle sizes here and how big they are, it points to when the pullback does happen, it's not going to just be $1,000 or $2,000. It's going to be huge. It's going to be very, very similar to last time, and most likely will involve what we call in the technical analysis industry a blow-off event. And blow-off events look something like this. Usually a big pullback, well over 20% into 30%. And then it comes back up very aggressively after that, and we hit a Fibonacci pullback, usually around a 61.8 to 78.6. And we'll talk about that more on the channel as we go along. But this is the type of thing that I'm now starting to think will happen with Bitcoin. The more it goes up, the faster it goes up right now, especially at the time of year, the more likely it is to unfortunately crash and, of course, have one of those blow-off events. So let's talk about gold now, another very popular one that's being traded right now throughout all of the markets. And of course, gold is continuing its bullish move. Couple of things to note here. Daily 2050 exponential moving average cross. We talked about this 1900 being a key pivotal bull kind of zone here where the bears are really fighting against gold being able to move up. Now, I said before, remember those particular important candles daily here. Daily shooting star candle, no new low, and potentially this week we see a bullish close above this shooting star candle. What does that mean, guys? Well, it means that we've got bullish momentum at that point. It's very similar to Bitcoin, where we're going to most likely see gold gravitate to the next level, being that 1930 and then possibly even 1960 level, where previous resistance and previous resistance were. So for gold bulls, you really want to see a break and close above the 1900 zone, but things like the 2050 cross on the daily are very, very bullish for gold. I like what I'm seeing here at this stage for gold and for silver as well. If we take a look at silver, we're on the weekly chart here. I want to be on the weekly because last week we got a long leg doji, right around that $26 mark. The $26 mark we know was previous resistance and previous support. So this week, while it wasn't very convincing, it held a bullish close above 26. And that starts to put in play what we've talked about for a little while here on the channel, which is the bullish movement that should come back into silver, and the fact that between 22 and 26 was a bit of a range or market structure channel. When we take the extrapolation out for that, you'll notice that it really targets that $30 zone or just around previous highs. So things are looking pretty bullish for silver, and we maintain that the price action really looks quite good. And as long as we get things like a break of a new high, we should be looking at some pretty strong technical patterns here on silver moving forward. And silver also has, remember, those properties where it is demanded in rebuilds throughout economies. So well worthwhile looking at silver right now. And things are looking pretty good here on the weekly. Go into the daily and we go into the 4 hour and those types of time frames, you'll notice here that we're starting to form a little bit of sneaky resistance at around this 26 kind of 70 zone. Again, that may be worthwhile thinking about. If we get a movement up, let's say it does break through and get above that zone, comes back, retest. We've got a 1, a 2, and a 3. One of my favorite types of setups, so 1, 2, 3. And then, of course, a further bullish move up, cracking that previous high and going hopefully all the way to just underneath that $30 an ounce for silver. Things are looking good, and things are definitely probably the best for commodities over this period of the holiday season. That's really what I've been looking at mostly on the charts over this time. Let's talk about US 100 Nasdaq now. So US 100 Nasdaq has been moving very, very nicely in terms of a slow grind up. It could be possibly coming to an end. It depends on what really happens with things like non-farms, FOMC meetings, and of course, other just general concerns around the world, and the fact that we've had a big bull run, but we're still moving towards that kind of self-fulfilling prophecy of getting past the 13,000 on the Nasdaq and possibly moving to the 13,300 zone. That was kind of the range that we took here on the weekly from the previous move breakout, and it still looks to be intact at this stage with the slow melt up. If we go down to the smaller time frames, you'll notice here 20 exponential moving average seems to be continuously holding pretty much every single bearish move here. If you're a bear on this market, you'll want to see a close underneath this 20 exponential moving average to most likely say, okay, yes, now we're ready to do a pullback, at least back down to possibly this 12,100 zone. And then of course, anything under that, where you're looking at previous supports, and we'll cover that on the channel later. But the 20 exponential remains my main key area that I'm looking for on the shorter time frames for bearish intentions. If the bears can't get it underneath and close underneath this 20, it's really just super bullish for now and super bullish until that really ends, and that trend does end. And it will eventually happen. It's just going to take a little while, unfortunately. If we take a look at the US 500, the grind up continues here as well. We closed the week at 37.58, well on the way towards this 3800. We may reach 3800 this week. Basically, at that point, we'd be getting pretty high on the Nasdaq as well, and possibly that's where you start to see a little bit of selling pressure come in. But I'm looking more to the Nasdaq as the lead here for telling us what's going on. That 20 exponential support all the way through has been really, really good so far. And I'm going to continue to really look at that on the charts. If we go to the weekly, of course, had that rejection candle followed by a big bullish candle here. It's hard to be short in this market. But I will say this, if you are short or you're thinking about dips, 20 exponential on the weekly seems like the go. Basically, that would be a pullback back to this 35.20. We see here previous resistance, possibly acting as support. And that seems to be the key zone in the market that just seems to make a lot of sense based on previous pullbacks, based on the movement of the previous pullback. Even if we take the ranges of these pullbacks, look at this, we take this distance. I haven't even done this yet, but I'm sure that these distances are all fairly even. Notice how they're all fairly even, a 3800 and then a pullback. All these pullbacks seem to be around the same amount of points in depth. Not exactly, but very, very close. And as technical analysts, we want to be trying to figure out those types of things. Often pullbacks will be very, very similar throughout bull runs. You'll also usually see something like a bullish run followed by a very similar pullback will happen twice. So sometimes it pays to take the distance between the pullback and the high and then extrapolate that out again and see whether that lines up with your numbers. So that lines up with around a 38.60 here. And that's something that I often do in TA. I'm not going to do it too much here on this particular trade yet because I haven't seen enough, but that's the type of thing that we do look for as analysts as much as possible. So for the week ahead in terms of news, guys, we've got OPEC JMMC meetings, of course, on Monday, 4th of Jan. Then if we scroll through, we've got the FOMC meeting minutes for me, Thursday, Jan 7th. It'll be Wednesday in America. And if we scroll further down, we've of course got the non-farm payrolls change. Now we'll probably be live streaming this event as we usually try to do. And it's always a lot of fun. So come and join us for probably what's going to be our first live streaming event of the year, US non-farm payrolls. And then we'll go back into doing our standard Mondays whenever we can. So come and join us. Live streaming is always fun, and you get to ask us all the questions that you might have about trading, technical analysis, and just anything really that you're interested in finding out more about. Okay, guys, that wraps us up. Please remember to subscribe and, of course, give us a like if you enjoy the videos, and we'll see you in the next video talking about the markets this week. Thanks so much for the support in 2020, everyone, and we hope 2021 is going to be a big year for the channel and a big year for each and every one of you. Bye for now.